Hello, friends. It's John Lone King, and it is Friday, the 14th of November. We're literally less than 2 weeks away from Thanksgiving. What, 6 or 7 weeks away from Christmas? 6 weeks, I think. Crazy how time is flying. Anyway, before we get started, I want to quickly make a comment. If you are a first time home buyer, if you are thinking about buying a home, now is a really good time for us to have a conversation. If you're in the state of California, the new California Dream for All program is coming out early next year. Now is the time to get ready. If you don't qualify for the Dream for All program, whether you're in California or outside of California, there are amazing down payment assistance programs right now, and sellers are willing to negotiate in ways that we haven't seen in years. And so now is the time, if you're a first-time home buyer, to talk to me about what is it going to take to get you into a home and to figure out if it's the right time for you to purchase a home. Now, let's go ahead and dive in and see what's going on this week. So, Wednesday night, the shutdown ended. Did you guys feel it? Like the world changed. You woke up in the morning and everything was different. And the sky was bluer and the sun was shinier. No, nothing's different. Okay. The fact is that I'm happy that all of the federal workers are back to work. I'm happy that they're going to get paid. All of that stuff is really, really good. But the truth of what is changing is now we're hopefully going to get more market data that's going to help us to see what's happening. The problem is we've got a lot of challenges with that data because the Fed is saying right now, hey, we think that we've got a problem with inflation and we want to keep interest rates higher because inflation is still a bigger problem to us because they haven't gotten their reports to show that unemployment is a problem. We see it in the news. We've seen it on some of the reports, but here's the biggest problem. My video just went dead. I don't know what happened. Well, hopefully I'm still there. I'm going to pretend that I'm still there, and I'm just going to go ahead and keep talking. Here's the biggest problem is we're never going to get back the data from what happened in October. And so that data is real-time data that they're grabbing, and those people weren't working. And so they weren't capturing that data. And so we with my video. But anyway, I'm going to assume that I'm still there, or maybe you can hear me, or maybe I'm just talking to nobody. But the data is never going to come back again. And so we're going to have a gap in that data. It's not like there's a bunch of reports that are coming out tomorrow that are going to cover the entire time. Having trouble connecting. Oh, no. All right. Well, hopefully we're still good. Anyway, I'm going to keep going. So the problem is inflation is still stubborn. The government has got one report in October about inflation, and they got no reports about employment. Remember, high inflation means that we are going to have high rates. High unemployment means rates are going to go down. And that's the challenge that we are dealing with. All right. I don't know what the heck's happening with my internet, but hopefully we can keep going. So we've got some policy whiplash that's going on in Washington, D.C., and it isn't just about what's going to happen with the future of interest rates. It's policy whiplash that has to do with what's coming out of the White House. And there's three big things that came out of the White House in the last week that I want to go over. The first one is the 50-year mortgage and the buzz regarding the 50-year mortgage. Here's the deal. A 50-year mortgage is not a viable option. And I did a video about it that's on my YouTube channel that you can watch. The simplest thing to think about when it comes to a 50-year mortgage isn't how much extra interest you're going to pay, which matters very, very much. But it's the fact that it really isn't going to save you very much money because the rate will be higher. Hear me, the rate will be higher. Why? Well, just look at the difference between a 15-year and a 30. A 15-year loan has a lower interest rate. Why? Because Wall Street's getting their money back faster. So they're investing the money and they're getting a certain return on that investment, and they're getting the money back faster on a 15-year. And so they are going to charge you less in interest. Well, if they're not getting the money back for 50 years, they're going to charge you a higher interest rate. And with a higher interest rate, it's going to remove almost all of the monthly payment savings. So if you think the 50-year mortgage was a great concept, it is not. And it is not something that I would recommend that you put any weight into or expectation that it's going to solve all of our problems. So it appears that the White House has thought the same thing. So now they're talking about proposals to allow all mortgages to be assumable and also to be portable. So they're talking about all mortgages. This came out last night before. That says all mortgages are going to be assumable, which means that if you are selling a home, you can allow the buyer of the home to take over your mortgage at its low interest rate. That is already allowed if the seller has an FHA loan, a VA loan, or if the seller has an adjustable rate conventional loan. You can already do that, but there's flaws to that process, like serious flaws to that process. And what I'll tell you, and hold on, because hopefully I'm broadcasting, but I'm going to switch my internet connection here real quick. All right. Let's see how this goes now. I'm having internet issues, so hopefully you guys can still hear me. I'm going to keep talking as if everything is fine. So the bottom line is, when we are looking at, how do I want to say this? When we are, and I just got a text from somebody saying my video is lagging badly, so hopefully it will catch up. I apologize. I'm not really sure what's going on right now. The assumable mortgages already happen today, but they don't actually happen smoothly. And the ability to do it is not what you think it is. So the first problem is that your balance from the seller's side, they owe a certain dollar amount and they want to sell the house for what it's worth today. And so what you're going to end up having is, you're going to end up having a situation where a seller has a $300,000 loan on a house and they're trying to sell the house for $500,000. Well, how do you come up with the other $200,000? You got to get a second mortgage. And that is a super high interest rate. I read an article this morning that said, oh, well, yeah, but if I can get my first mortgage for $300,000 at 3%, then if I have a second mortgage at a 7% interest rate, it's no big deal. Okay. Well, that isn't really the case. First of all, the second mortgages are a lot higher. You're talking about 9 to 10% on average, especially if you're putting less than 20% down. And then the other problem is, it takes forever to process the actual assumption. So if they say that fixed rate mortgages can be assumed, then it's a great idea, but the servicers aren't going to let it happen, because the servicers are limited on how much money they can charge for an assumption. I can't help you assume a mortgage. The truth is, I am paid, mortgage originators are paid for finding you a mortgage, matching a new mortgage with a client. And that's how our world goes around. If the mortgage is already existing, then you have, if the mortgage is already there, then there's no compensation for finding the new mortgage and placing them in there, which is fine. Except now you have to go to the servicer, and the servicer has to have their staff handle it. So you're not going to have somebody who is going to give you advice. You're going to have a clerk, and they take up to 60 to 90 days to complete. And the great news is, it's cheap. They're only allowed to charge you like $2,000 total in fees to do it. The problem is the amount of manpower that it takes, especially for the numbers that don't complete, because they can't charge you if you didn't successfully finish, which means maybe 20% of them finish. So now they've spent $10,000 on average for these to only make $2,000 on them. They're losing a significant amount of money. So these assumable and portable mortgages. So portable, the difference with portable is, portable means that you are taking your mortgage with you when you go to another home. And the argument is, they already do this everywhere else. They do this in Canada. They do this in Australia. They do this in the United Kingdom. They do. But here's the deal. There is a significant difference in how mortgages are done. I was talking to somebody on my team the other day, and I said, the United States is the only place that does 30-year fixed rate mortgages. And they were shocked. They're like, what? And I'm like, yeah, like, we think this is everywhere. It's not. Nobody else does a 30-year fixed rate mortgage. All other countries, specifically Canada, Australia, and the United Kingdom, who allow you to take your mortgage with you, your mortgage isn't fixed for 30 years. Your mortgage is fixed for no more than 5 years, and in most cases, it's only 2. So you have a mortgage that the rate changes, is re-established every 2 to 5 years. So sure, they'll let you take that with you, because they're going to reset the rate anyway in 2 to 5 years. There's a whole different model here in the United States that gives you a fixed rate and a fixed monthly payment for the entire time. Okay. So you have a benefit they don't have, and you want the benefits that they have that we don't. It can't work that way. Now, I understand that the administration is trying hard to solve the affordability problem. This isn't going to solve the affordability problem, because here's the other piece. More than half of the homes in the United States don't have mortgages on them. And so you got a lot of people who are going to be selling homes. Let's pretend this does come true. It's flawed, because you're going to have people selling homes that don't have a mortgage because, hey, it's a good thing you paid cash for your house, or you paid off your mortgage. but now you're at a disadvantage when you're selling your house. Because if every other homeowner gets to have their mortgage be assumable or portable, then when you sell your house, you don't have that enticing low interest rate to offer somebody. And how about everybody who bought after 2023? Like, there's only a small segment. Now, small, it's a large percentage of the population that has a rate under 5%, but not a large percentage of them are trying to sell. And by the way, if you port your loan from your house to another one, then you can't sell the house with that assumed loan on it. And so you're going to lose money on the sale of your house because you're competing with other people who are willing to let the buyer assume their mortgage. In other words, this is a broken scenario that isn't going to solve the problems. It sounds really, really good. It's a great soundbite to say, I am trying really hard. By the way, y'all know that I don't get political. I'm not saying I agree or disagree with our presidential administration. All I'm saying is what is happening right now is a soundbite. It sounds like the administration, the White House, is trying hard to solve the affordability crisis, but the proposals they're throwing out there, 50-year mortgages, take your mortgage rate with you, let the buyer of your home assume your mortgage rate, they all sound good, but they're not rooted in reality, and it's not going to happen. So the real impact on buyers is, look, we've got to focus on timing in the market, because as a buyer, you have a really good opportunity right now to negotiate. And you can get credits from the seller that you can use for temporary buy downs. Remember, what I just talked about was a whole different system that outside the United States, they don't have fixed rate mortgages. And so if you want to have a lower interest rate right now, you can, but it comes with a potential for a higher interest rate later. Do you want that? That's your call. What I'll tell you is, as a renter, you already have that. Every single year, your housing payment changes because you're on a 1-year lease and your landlord may keep you. They may not. They may increase your rent. They may not. So you don't know what your rent is going to be 5 years from now. But when you buy a house, you say, I don't want to take that chance of not knowing what payment's going to be. I agree with your thinking, but you're already in a position right now where you don't know what your payment's going to be in 5 years because you don't own a home. And so you can't have the best of both worlds. And that's all I'm trying to say. I see all sides of this argument. I have a personal opinion and I'm sharing a lot of it with you. But the truth is, I don't disagree that there are some benefits to these proposals. I don't think they're a good idea. I don't think ultimately they're going to happen. And the real impact on sellers is going to be even worse. I already alluded to it, because sellers now, if these portable and assumable mortgages really did come to fruition, you've got a problem as a seller, because you have to decide, do I want to entice the buyer to get the best price on my home by leaving my mortgage behind, but now I have to pay a higher rate on my new house? Or do I take my mortgage with me, but now I don't get as good of a price on the house that I'm selling? You're going to lose on one side or the other. And then if you've put yourself in the great position of paying off your home, of not having a mortgage and being debt-free, you're actually at a disadvantage when you sell your home because you don't have a mortgage that can be assumed. And the final piece of this is, I don't think that the federal government can actually force contractual changes to private contracts, because all of these mortgages were written without the ability to be portable or to be assumable. And I think they could mandate going forward, all new mortgages have to be that way. But who wants to take their 6.5% mortgage with them? We don't think interest rates are going up significantly. We think long-term they're going down. So it's not the people who are getting mortgages today that worry about can their current or new mortgage be ported or assumed in the future. It's people who have mortgages from years ago. And I don't believe the federal government can force a contractual change to a contract that was signed between two private parties in the past. And that's the final challenge that we're dealing with here that says this really isn't going to happen. So market data this week, we really don't have any. We've got the federal government that opened back up. We've got potential data that's coming out, but it's going to be flawed. They're going to be filling in the gaps. It's probably going to be next year before we start getting any reliable data. The problem is the Federal Reserve has to meet in a month, and less than a month, and they are going to make a decision on future of interest rates based upon the limited and flawed data that they have, and that is very, very scary. So what are the rate trends looking like? They're pretty stable. We're up a little bit, but they're saying stable in the low sixes. Be careful where you get your information about interest rates. I will tell you that two conversations I had in the last couple of days with clients who said, John, I don't understand. I'm seeing all this information about interest rates out there and I don't know what's right. And the answer is there's no way to know what's right. And that's sad, but it's true, because there's lots of factors that go into determining your interest rate. And yes, the big things, your down payment amount and your credit score, are huge. But even as simple as whether you are including taxes and insurance in your mortgage can impact your interest rate. Things as simple as, is it a single family home or a multi-unit property or a manufactured home or a condo, will impact your interest rate. And so when you look at the rate trends, you've got to be careful, because some lenders are going to show you a rate with a whole bunch of fees built in there, and they're going to hide the fees under a tab called disclaimers that you got to click on and open up and then understand the legalese that you're reading. And so they can make something look better because they're hiding the truth somewhere else. So that is the challenge that we're dealing with. Bottom line, guys, I think that as we head into the end of this year, if you are looking to buy, you have an opportunity, because sellers who have their house on the market during Thanksgiving and Christmas, they want to sell. They want to sell. And so they are willing to negotiate. They are showing their hands that in most cases, if you're willing to let people walk through your house during the holidays and have to keep your house cleaned up and perfect during the holidays, it means you are a very, very motivated seller, and you have an opportunity to use that to your advantage when you are negotiating. As far as takeaways from here, just recognize it's going to be highly volatile going forward. December is usually a volatile month anyway for the markets. A lot of traders are taking vacation. The Fed slows down their communication as we hit the end of the year because they're taking vacation. So with a lack of information, it's called a narrative gap. And your mind fills a void. If you don't have information, then your mind will jump in and fill that void with whatever it thinks, and usually it's negative information. Well, guess what? Multiply that by everybody across the economy, and when nobody's talking, when the data is dark, then the loudest people are jumping in and saying, well, this must be happening and that must be happening, and it gives them an opportunity to make their case because there's no evidence to prove that they're wrong. And so be very careful about the information that you're receiving right now. I appreciate that you're looking at me as a source for that information. I do apologize for the technical issues with slow video and laggy earlier, but it looks like it's working a whole lot better now. I hope everybody has an absolutely wonderful weekend, and we'll talk to you all next week. See you soon. Bye-bye.